Ready?
Do I get to interview you at all?
No. And I'm a horrible interviewer.
Yeah.
Hello, everybody. We've got a special guest with us today, John Prussell, who is the National Sales Manager at City First Mortgage. And I thought while we had him here in the office that we would go ahead and ask him specific mortgage-related questions that you guys may not think to ask, but that might be of interest to you. So, John, welcome.
Thank you very much.
Wondering if you could tell us a little bit about City First.
City First was founded in 1992 by Garrett Van Wagner. Started out as a small mom and pop shop, and we like to think that we could still keep that mentality where everybody knows each other's name. You're not just a number. We hover between, right now, I'd say about 250 to 300 employees. On the national level, we have about 115 loan originators. And the great thing about us is everybody here, their opinion matters and their voice is heard.
And so what would be the difference then, John, between, say, a City First, which is a mortgage banking company, and let's say Chase or Citigroup or Wells Fargo?
So right there you give perfect example of what people don't understand. So we are a mortgage bank. Okay, we loan our own money and then we sell everything to the secondary market. Chase is a depository lender. Okay, so you could just go into Chase, you can make deposits into the bank. Okay, we don't have that option here. We are strictly a mortgage bank where they are considered a depository lender.
Gotcha. And so is there an advantage to being a mortgage bank versus a bank?
It's kind of, I've been them all in my career. And it's what came first, the chicken or the egg, right? A huge advantage to working for a mortgage bank or broker is you have options, okay, and you have different resources and outlets. A big bank, okay, or a depository lender normally has a little bit more strict guidelines, okay? So someone coming in to your office here with some obstacles to overcome, you have many different resources and outlets for that, okay? And there's no one person fits all boxes type of thing. And so we have in-house products, and we also have products called QM loans, okay, qualified mortgage loans. It allows you to take someone maybe with some difficult income to verify or maybe some credit issues to verify, and it allows them to obtain the financing also.
Okay, that's great. Can I back up for just a second?
Absolutely.
When we talk about interest rates, and we talk about, we're hearing a lot right now about the Fed and inflation and all of those kinds of things. How will that affect mortgage rates in your opinion?
So, if I had the crystal ball, right? I've been in the business for 28 plus years. Rates go up, they go down, okay? I think that right now people are a little bit nervous. You've seen some of the call centers get out of the business, okay, because they just can't put out a mailer or dial for dollars and lower someone from 4% to 3%, okay? The best time to buy, okay, is today, tomorrow, or yesterday, right? It's always a good opportunity no matter what the rate is. If you're renting, you're paying 100% interest. Okay, so I like to go by that adage. I started out in the business where interest rates were 12%. Okay,
I did too. Yeah.
And we thought it was everything to get them down to 10 and then 9 and 8. And last year's we're selling into 2s. Okay, I'm an internal optimist. I think that today's market creates double the opportunity, maybe even triple. Anyone you put into a loan now will probably most likely become a candidate to refinance down the road. 2, it gets people off the fences thinking that they're waiting for rates to go lower and lower before they buy. It's not happening. They're going up right now. Okay.
And so what do you think, John, and again, this is going to go back to your crystal ball analogy a little bit, but as rates climb, are you expecting to see a decline in home prices?
You would like to say that the correlation is there, as it has been in the past, but I don't know. Okay, I would think that it would create a lot of stabilization to the marketplace, and I think that all different pockets are affected uniquely and differently. Okay, I think like a SoCal, Southern California versus Noblesville, Indiana, they both have well, I could say this about Southern California. They might have a false sense of appreciation where Indiana might not. So where you see prices level off, it might not be as drastic as 2008 and 2009, but I most definitely think there will be a correction.
Okay. And how are we in terms of inventory? Like, are we still in a housing shortage, or do you see inventory?
Well, it depends on what
catching up?
news channel you listen to, and I don't mean to make a political statement about it, not at all. I think that we personally, as City First Mortgage, we experience people battling the housing shortage every single day. It's especially rampant in Austin, where they're submitting 6-7 offers just to find the right house. Okay, where in other parts of the world, or I should say of the United States, it's not as bad. So I think it's regionally driven. But I think all over the United States right now, I mean, I was driving around this beautiful area of Noblesville from Indianapolis. You guys are booming here right now. I'd never even heard of Noblesville up until about a year ago, right?
Sure.
So I think it all depends on the region.
Gotcha. That's an interesting analysis, because you have basically access to the data.
Correct.
On a national scale, right? So then, as City First is working through this market, what is your what are you seeing as far as I guess maybe nationally, or if you can comment even locally in the different markets, what are you seeing as far as participation by the public for putting in offers? Is it slowing down? Is it increasing? Because we've had some of those issues too, where we've had, and I wanted out there today, sometimes we've had clients get discouraged, right? Because they've had to put in offers on 6 or 7 properties.
It's difficult.
And I've had one client this past year go, actually I've had 2 and that's the first time ever kind of go, you know what, I just want to stop, right? Because they got discouraged. So how would you talk to people out there that are having to put in multiple offers? Or what would your advice be?
My advice would be is to get the strongest pre-qualification or pre-approval letter out there. Okay, it's like walking in with a bag of cash. Okay, because there are multiple offers. Okay, and that's pretty much any area right now. I would say from a historic perspective in the purchase market, we're having a record March right now. Okay, so that tells me that people are out there buying every single day. There's new communities being established. There's people that are selling up or buying down, right? Depending on what their belief is of the economy, okay, and what their kind of, I would say, 5 to 15 year understanding of it is. I mean, we show that we're in inflationary trends. Normally rates go up, but if you just talk to people, a lot of people are nervous about if there is a housing bubble, or nervous about the economy with jobs and everything that's going on overseas.
We get that question a lot, and in fact, Madison, who is helping us record and do all of this today, who's on the real estate side of things, has been talking to people who have said, "Oh, I'm just going to wait." Yeah. Right, but to me, it seems like there's a difference between a shortage in housing and where the market might just be generally, right? So they're like, oh well, prices are going to come down, but will prices come down even if we have this increase in interest rates and things, if there's not enough inventory?
I think a lot of the people, and this is just my own personal opinion, when they say that, they're reflecting back to the mortgage meltdown. Okay, and that mortgage meltdown really, there's a component of so many different things, including bad loans. Okay, and we've been regulated. The mortgage industry has been highly regulated since 2008, 2009 to prevent those things. So before, you could just get a loan with a pulse. Okay, you could have stated income, stated assets, and a 500 score. Okay, although we're doing non-QM loans now, they're a lot more regulated and a lot stricter guidelines. Okay, so you do have to show some sort of proof of income. If it's bank statements, that's great. You have to have substantially better credit, although you don't have to have perfect credit.
Right.
Okay, and you have to have down payments. There's not such a thing unless you go with a DPA loan, down payment assistance loan, where you could just walk into a property without any equity into it. And equity causes people to hold on to their possessions a little bit longer, hold on to their assets because they have a vested interest in it. Back in 08 and 09, there wasn't much of that. Okay, so you saw all the people that walked away first were the people that didn't have anything into it.
Right.
That's kind of the long-winded answer. Is I think that it will stabilize. I don't think we're going to have as big as correction because you won't have the foreclosure parade, I guess you could call it.
I'd like to circle back to, again, just on something that you said that I get asked all the time, and that is, well, probably 30% of the time, people ask me, well, if you guys fund my loan, will you sell it? And you said that, yes, City First does sell there.
Correct.
Could you explain to them maybe sometimes the difference between, how Fannie and Freddie work and how the money cycle works maybe a little bit, and how even with banks have to sell loans?
In 2 minutes or less? No. The general 30,000 foot overview is you have brokers, bankers, direct lenders, depository banks. Fannie and Freddie are the two big government backing agencies. Okay. There's also a lot of servicing companies out there. As a mortgage bank, we make money on originating the loan, and then we also make money on selling the loan. Okay, we sell probably 99.9% of us. We fully disclose that up front. Okay, but it doesn't affect their payment. Okay, and you'll even see mortgage companies change names a couple times, and it's just called buying paper or buying the notes. And that could happen a few times during the life of the loan. It doesn't mean anything to the consumer except for the itemized statement showing up on their payment every month might come from a different name.
John, can you define what a servicer is?
Yeah, a servicer is someone that's going to collect your payments, okay, and then report them to the agencies that you're paying on time or if you're late, and they'll also handle anything on a demand statement. Meaning if you're going to refinance or pay off that loan, they handle all that, in addition to the interest payments at the end of the year, so you could have your interest tax deductions.
Gotcha. I was really interested. You made a statement, and I've been in this business for a long time, about if you're renting, you're paying 100% interest. Can you explain that a little bit? I found that... never heard that in 30 years, but I would like to know what your perspective is on that.
My perspective is people get intimidated or shocked by rising rates. Okay, I've 28 years and I don't watch the rates. Okay, I'm more of a payment guy. What payment can you afford? Okay, I don't have the exact equation off the top of my head, but if you have $100,000 loan, okay, at 3%, the difference in payment at 4% is not all that much. So we at City First, we sell payment more than interest rate, although we always have a very competitive interest rate. And we compete with the big boxes out there. If you're up against a Wells, a Chase, a Loan Depot, some of those people, we're right in there with them. And going back, kind of getting long-winded to your question is, it all comes down to the overall experience and professional background of the loan originator, and that's important in our marketplace, okay? Because that loan originator will put you in the best program that's out there. And what I mean by that is, you might not have to take a 30-year fixed. If you know they're only going to be there for 3 years, take a 7-1 ARM or take a 5-1 ARM or things like that if you're really concerned about the payment to get into the lower rate.
So in other words, you're saying that those of us that are a little longer in the tooth and have a little more experience may work well.
And that's why City First, and here's a plug for City First, we hire those people, okay? We're I would say more of a boutique shop than just a numbers person type of thing. Our loan officers all across the nation they're educated, they're experienced, they've been through the ups and the downs, okay? And it becomes a relationship, okay? It's not just, hey, I want to put an offer on this property. You become kind of a friend for life and part of the City First family, to tell you the truth. And we take that experience, and the average age of a loan officer in Texas is 54 years old. So we know that there's a whole new generation coming up. So we've asked some of our longer in the tooth type of employees to kind of mentor and train a whole new generation of loan officers coming through. And we just hope to keep passing it down and passing it down.
Sure, and I've got one of those too, right?
Yep.
A really good young man by the name of Charles Thomas, who has gotten a master's degree in finance. He's been doing this for 18 months now, and he's really learning and coming up quickly, right? John, do you have? Can you just mention maybe something about operations staff? I know that everybody's been super busy. Some of the banks have taken anywhere from 45 to 60 to 75 days to take the application on a loan until it funds. And we call those turn times. So what do the turn times look like at City First, and how do you make sure that the process is smooth?
Something that I like to say is statistics don't lie. Okay, and we use one of the largest loan origination systems, LOSs, called Encompass. Encompass is owned by Ellie Mae. Okay, and those stats are reported on a monthly basis. Those stats, according to what we read, we are industry leading as far as turn times. Even during the mortgage, refi boom the past couple years, we've always remained in the top 10% of all of our competitors. It's been our company philosophy that we just don't miss turn times. Okay, we are led by a phenomenal director of operations, Mr. Chaz Ramirez, who basically has a finger on the pulse in every department here. And there's no ops versus sales at our company. We are all one. We don't have ops calls and sales calls. We have team calls. Okay, and there's department heads here that do a tremendous job with their leadership capabilities, making sure that we're on top, meticulously organized, as you've experienced so far, on top of our pipelines. It's so important, especially in the purchase market, to close on or before time. You're one day late, and that could have a trickle-down effect of, someone was moving into that property and they had to move to another property. That it's not tolerated, it's not accepted, it's not our practice. We close on time.
I've heard over the years lots of times about people with other companies having all of their stuff in a U-Haul van. Then all of a sudden they get to Friday and they can't close, and now all of a sudden they've got to take that truck and rent it for another week. And that's an industry standard, unfortunately. I've used my money, my corporate money, my expense account, whatever, to pay for hotel rooms, to pay for moving van extensions, you name it. Knock on wood, since my tenure here at City First, I have yet to do that. That's great. People will love to hear that. Right?
Absolutely.
Is there anything else you'd like to say about the company before we wrap?
We're excited to be here in Indiana. Okay, we really are. Noblesville is a beautiful community here, and Indiana is a great state, and I've always been a Colts fan. It just, whether you work here or if you're a customer, you'll always be part of the City First family.
It'll be interesting to see what Matt Ryan does this year with the Colts.
Absolutely.
Thanks for checking in on our video today. We will send this out to anybody who also requests it and wants to look at it a couple of times. And that's a little bit of an inside perspective about the mortgage business and how it works. John, thank you for your time and
thank you, Steve,
being with us on camera today.
Yes, sir.